News, we're hearing that 3 UK banks have failed the Bank of England's stress test. Let's speak to our economics editor, Ed Conway, about this. And this is 3 big banks, Ed, household names. A positive sign, perhaps, for the test, but how worrying for people who bank with them?
That's right. It's RBS, Barclays and Standard Chartered are the 3 banks that we're talking about here. Now, what's happening here is that every year the Bank of England looks at the banking system. They look at specific banks and they try and work out whether they will be able to withstand a future economic crisis. So this time around, they're looking at a potential crisis that might happen in the future. And this is it's kind of wargaming out a worst case scenario. So in this case, a crash that's quite similar to what happened in 2008. Big falls in house prices, equity prices, big rise in unemployment. And what they found is that in those circumstances, that RBS, Barclays and Standard Chartered wouldn't have enough capital. And when they talk about capital, basically that's a kind of buffer the banks set aside, buffer of cash that's raised from shareholders usually, to actually deal with that kind of crisis, to keep them within certain levels that the Bank of England deems to be safe. Now, on the one hand, this is certainly a cause for some concern for those 3 banks, and particularly actually for RBS. It's already said, by the way, that it's going to raise a bit more capital in order to make good this shortfall. So it's not, there's not kind of cause for panic in any kind of way at the moment. The Bank of England said they're happy with that. The same goes for the other 2 banks, although they haven't failed quite so badly, if you see what I mean. There's a few different kind of criteria that it judges it on. But on the flip side, 4 of the 7 major UK banks passed this test, and it's worth just bearing in mind that this was a far tougher test than the bank carried out last year. It's a really severe downturn, maybe not a Brexit-style downturn. This, the criteria was set before Brexit happened, but nonetheless, for some banks, they remain resilient, even if there were another 2008 crisis, which certainly couldn't have been said before the last crisis. So I think there's 2 sides to it, really. There's, on the one hand, for some of those banks, it's relatively reassuring because this really was a tough stress test. But for those other banks, and those are banks actually, last year, 2 of those banks failed the last stress test. So for those banks, they continue to need to raise more capital, which means basically issuing more shares, getting people to buy those shares and keeping that cash aside.
And Ed, just for people who are watching what you're saying this morning over their breakfast, does the failure of this test matter to someone who's got, say, an ordinary current account or savings account with these banks?
No, not at all. I mean, the Bank of England has said that it is happy with the plans that these banks have given them. These are very tough stress tests, and so it doesn't say there's any need for deep concern about the health of these banks and their balance sheets. But nonetheless, this is part of its kind of routine monitoring of the financial system, which is to say, previous to the financial crisis, it didn't really do this quite in this way. And it's saying, listen, if there were another financial crisis, if there were another crash that was similar to 2008, actually, some of the ways that the things they're measuring here are even worse than in 2008. Bigger falls in house prices, bigger falls in equity prices. So they're saying, if things get really bad, how would you be able to cope in the future? And they say that 4 of these banks are doing pretty well, but 3 of them do need to raise extra capital. Nothing to panic about, but certainly more work to be done to try and sort out the wreckage that was left after the financial crisis last time around.
OK, Ed, thank you.